Okay, so we're keeping a very close eye on Euro GBP for a potential sell tonight. This trade idea is based on a confluence of reasons, and we're going to go through them right now. We've got price action at this moment in time in the formation of a bearish pin bar reversal, rejecting this soft level of resistance here. As you can see, it's tested multiple times ever since the beginning of March. This year it's only broken it once, and we can see that price is within a range here, a medium-term range, and whenever we get a range-bound market, it makes abundant sense to sell the top of the range or to buy the bottom. And as we're in a predominant downward trend here, we've got good order angle and separation between the 200 moving average, the 50 and the 20, so that's a sign that the sell bias is still well and truly entrenched. Aside from that, we've got bearish reversal divergence as well, so we can see here that while price has made a unique high today and rejected this level of resistance quite abruptly, it made a unique high today compared to Thursday, where it made a high which has been exceeded today, but compared to that the RSI has made a lower high. So wherever we get price making a higher high but the RSI making a lower high, then we've got that disagreement. Then that's a sign that the momentum of the buyers is getting a little bit well, it's diminishing in strength, and we can see that sellers are potentially coming back into the market. If we look on the hourly formation as well, we can see here that we could potentially see the emergence of a double top formation here on the hourly formation, which has spanned over the course of 3-4 trading days. And if the conservative trader does trade this by simply placing their entry below today's low, minus spread, minus that additional pip, with their stop loss above today's high, plus spread, plus that additional pip, then by the time it comes down to test the neckline of what could potentially form as a double top on the hourly, then at least a 1-to-1 potential reward to risk has been made. Okay, so tentatively, if we say we've got a distance of 65 pips difference between our entry and our stop loss, and about 65 down, or pips difference between entry and the neckline of this, what could potentially form as being a double top formation, then that's a 1-to-1. But of course, looking at how this range has performed over the past few months, we can reasonably say that the bottom of the range would be a more likely target, as we've seen price test this bottom of the range, this level of support here, just above 0.7050. We can see that if we do go to a slightly more aggressive target, even if it's not quite to the bottom of say 236, 236 pips divided by 65, that's a decent 3.6 to 1 reward to risk trade. Okay, so the conservative trader, what they'll typically do is they'll place their entry below today's low, minus spread, minus that additional pip, with their stop loss above the high, plus spread, plus that additional pip. And what they'll do is that they'll wait to be triggered into the trade, so they'll place their orders after 10 o'clock PM tonight, London time, and given there's not really much movement in the market overnight, it's very unlikely this trade is going to be triggered. But if it's not triggered within 24 hours, i.e. if it's not triggered by 10 PM on Wednesday night, then that's a sign that there's no real downside sentiment with this trade. Okay, so the orders will be deleted. If the trade is triggered, then what the conservative traders will typically do is trail their stop loss above the high of every second seller bar if they wanted to be aggressive in their stop loss management technique, and that's typically a good compromise between banking profit and giving the trade enough room to breathe in the course of retracement. Some traders might just like to set their orders up and forget about them, move their stop loss to break even once they're 65 pips in profit, and just wait for an all or nothing outcome. If their profit target is hit, then fantastic. If it's not, then at least they've moved their stop loss to break even and they lose nothing. But as it's a reward to risk of 3.6 to 1, that's 3.6% potential gain risking 1%. That's not a bad reward. Okay, so the day after we placed the trade on the 9th, we were immediately triggered into the trade on the 10th of June 2015, and rather coincidentally it took us 10 days only to realise our 7.2% profit or return on this trade, and the reason why we gained 7.2%, even though the reward to risk was 3.6 to 1, is because we risked 2% on this trade, and we usually do for every trade setup which we take, given that we don't have that many setups typically in a week or a month. So when we do identify a high probability setup with decent profit potential, this is the reason why we risk 2% and more than 1%. Okay, so day one, triggered into the trade, and then for those people who like to trail for every second seller bar, they did to lock in profit along the way, but we decided to keep it as an all or nothing trade. So as soon as we were at 65 pips in profit, i.e. the distance between our entry and our stop loss, we moved our stop loss to break even, i.e. to our entry point, so that if the market decided to turn around and go the other way, we would have lost nothing. And our limit order was just around about here. So we're on day 3, day 4, day 5, day 6, day 7, day 8, day 9, 10, and it hit our profit target, and we banked 7.2% on this trade, and so did many of our clients as well. So that was Euro GBP taken in June. On the 9th, classic setup, bearish pin bar reversal, accompanied with bearish reversal divergence on the RSI. It was a typical sell the top of the range trade in a prevailing downward trend.